without further ado, help me in welcoming Dr. Jerry Parrish.
Thank you, Michael. Very happy to be here today. I appreciate the invitation to speak. A little intimidating crowd to be speaking at. Usually I speak to normal business people, those who wouldn't kind of self-select into an economics club. Talk about what I'm talking about to business people. But first I want to tell you just a little bit more about the Metro Atlanta Chamber. I got recruited up here a little over a year and a half ago. I was still teaching at Florida State. And the recruiter said, I've got the best job in economics available. Would you be interested in? And I said, where is it? He said, Atlanta. And I said, listen, I said, I'm on the faculty at Florida State. I live on a 9,800-acre lake. Things are pretty good for old Jerry down here. Probably not that interested. He said, listen, he said, I tell you what. He said, if you look at the companies they deal with and the things that they do, and you meet the people that work there, if they offer you a job, I guarantee you'll take it. And I love bold people. He was very bold. So I said, all right, let's go through the process. And what I found is, first of all, we're the only chamber in the country, regional or statewide, that has a full-time chief economist. So a very rare situation. And what I love about this chamber is it certainly is the best staff, top to bottom, organization I've ever worked for. I'm going to be 64 years old here in about 3 weeks. I've worked at a lot of places, private sector and not. This really is a great organization because of what they do. We're for the 29 county metro Atlanta area, the MSA, we are the economic development agency for all those 29 counties. It's us, it's Georgia Power, it's the state of Georgia when it comes to negotiating with companies that want to expand here, move here, all that stuff. Love economic development. Done a lot of it, especially rural economic development where I'm from down in Florida. But they do that. A lot of people don't know, you see this in the newspaper, hey, the World Cup's coming to Atlanta, or a Super Bowl's coming to Atlanta, or a national, NCAA Final Four, blah, blah, blah. We have the Atlanta Sports Foundation as part of our organization as well. And so we're recruiting companies, we're recruiting big events. By the way, I've done if you want to, something to criticize, and I know economists are really good at that, I've written an economic impact report about the World Cup in 2026. It's on our website. It's fair game. I can't hide it from you because it's out there on the website, but I'm the first one that I know of that's published something like that on what kind of impact that's going to have here. Another thing we're involved in is downtown reimagined. And everybody knows, probably if you've been downtown, it's probably not as nice as it was at some point in time. And there's been some companies left and those things are going on. But I do want to tell you, we're highly involved in what's called Downtown Reimagined. One of our staff members is one of the key people that's doing that. And what you may have seen a couple of headlines out here. But what I want you to know about downtown, and I live downtown, back in May I moved downtown. Fortunately for me, my commute is less than 100 yards, which is one great advantage of moving downtown. I live in the building right behind where I work. But there's a lot going on downtown. And we calculated this the other day, what kind of money is being spent downtown on various things. And what you've got to know is there's more than $1 billion going on right now. There's another $7+ billion happening down there, is already in the plans. And high probability that a lot of this stuff is going to be redone. There's no dollar value on what's going to happen to the Georgia Pacific building, which is basically right beside ours. That's got to be another $500 million or so. So I want you to think about downtown, especially with South Downtown and what those guys are doing down there. Our Atlanta Tech Village folks, David Cummings and his crew down there. There's a lot happening here over the next few years that really is going to change downtown. All right, let's talk about the economy. I'll talk a little bit about the Georgia economy. I want to talk about, what the financial markets are telling us through some headlines and other things. And I'm going to give you my outlook of what we should expect for 2025 here in the Atlanta metro area in Georgia. First of all, you got to understand Georgia's been growing. Not going to be a shock to any one of y'all that got in a car this morning and tried to go somewhere, or have been over the last few months and seen all the construction. We've grown jobs. Think about this. Georgia's growing. This is since February 2020. Let's take the February 2020 numbers. Not only do you have this big drop for COVID, then you have to recover, and then what have we gained on top of that? So compared to pre-COVID, Georgia's grown jobs at 6.7%, compared to the U.S. growth rate at 4.4%. What does that mean for Georgia? If we'd have only grown at the U.S. growth rate, we'd have 100,000 less jobs than we do here now. Now, you guys, normal business people, I'd stop there. You guys, I would probably tell you that this is the this data is the non-farm series out of BLS, seasonally adjusted, in case you had questions about that. And feel free to stop me if you have questions. I'll be glad to take them along the route. But here's where you can see Georgia, Atlanta metro area is typically growing about 60% to 2/3 of the jobs. That's pretty much what's happened for a long time, and that continues to happen. It's a heat map on percentages, though, so you can see some of the smaller areas like Gainesville and Rome have clocked in some pretty good percentage growth. So the good news is growth is, Georgia is growing around the state, certainly faster in some other areas than others. Now, what have we been doing population-wise? This is population growth from 2010 to 2023. This is, yet again, a heat map on percentages. And you can see out of the 29 metro areas, and I've added Hall and Jackson up here for a specific reason, but you can see what numbers, the numbers in the middle plus the percentage, the growth rate. You can see Meriwether County is the only one that didn't grow in population during that time. What's important is 63 counties have lost population during that same time. Won't be a big shock to you guys. They're the rural counties. That's happening all over the country. It's not specific to Georgia. It's happening all over the world, or all over the U.S. And what's happened is, typically a plant closes down, nobody comes in to replace it. The labor force has to leave to find a job. But what you end up with is rural counties, and this is why I did rural economic development as a volunteer. It wasn't part of my job in Florida. They just didn't have anybody to help them. And what happens is the people who leaves, people with skills and opportunity leave. The people that are left can't leave, don't have skills, can't find a job, whatever. So what you end up with always is the larger counties going to have to subsidize the rural counties even more than you do now. And so that's something that we have to think about. When we look at another set of growth rates here, this is GDP. And I love to talk about GDP, and I tell the business people, the non-economists, I say, listen, there is a formula for GDP. I said I probably couldn't remember what it was. It's been so long. But what I try to get them to think about is value added. How much value added is going on? Because as we know, as economists, value added is highly correlated with high wages. So if your GDP is growing up, really, really good chance that you're growing high wage jobs. And so you can see whatever county you're from and the areas around here. But I also want to point out something. You may not know this. The Metro Atlanta, the MSA for Metro Atlanta got changed last October. Did anybody notice that? There's still 29 counties, but what happened here? And this is one of the reasons I added Hall and Jackson counties on. What happened is we lost Lamar County down in the south, and we gained Lumpkin County up in the north. So what does that tell you? The Census Bureau thinks that the metro area is moving to the northeast. Anybody going to be surprised by that? I don't think so. If you drive around here, you do business around here, won't be a big surprise. Very decent chance when they redo this again in the future that Hall and Jackson counties may end up in the metro area, was because you saw Meriwether County is not growing, and so we may see that in the future. But here's where the big numbers have come from. Fulton County, $105 billion during this time. But you can see the growth rates. The MSA is growing faster than Georgia, which is growing faster than the U.S. This is nominal. I use nominal, especially with business people, so I don't have to explain what real GDP is. That's exactly why, and so I appreciate you bringing that up because it is nominal. Yes, sir. Say that again.
How close are we to Chattanooga, MSA?
Well, as far as physical distance,
Yeah.
Rome is the top one that we've got here, and Dalton. So that's a good question. I don't know the answer to that. Dalton is not, as far as I know of, included in the Chattanooga MSA. But there are some Georgia and Alabama counties that are counted in there, aren't there? I think there are.
I guess what I'm trying to lead in, do you think we'll ever be a joint?
Join with them? No, I think if we had to join somebody, it's going to be the Athens-Clarke County one would be next because of that movement up to the northeast. That is my guess. There's not that much heading to the northwest as far as the metro area. That's a really good question, though. All right, now when I talk to business people, I ask them if they remember early 2023 and that the fact of about 85% of economists were forecasting a recession during late 2023 and early 2024. And some of them do and some of them don't, and I tell them why we all did that. Let's go back to the slide here. And it's because we had a yield curve inversion in July of 2022. Now the yield curve is not, this one is not inverted anymore. But what I point out to them was, that, hey, this has been a reliable indicator for years and years. And so then when we had a negative, yield curve, inverted yield curve, I said everybody thought within 6 months or a year or so we would have a recession. But I also point out to them that before every one of these recessions, the yield curve uninverts, right? Isn't that where we are right now? So what does that mean? And why did we get there? Well, it's because of this. It was because of inflation, the Fed trying to kill inflation. And I would say most of y'all understand that very well. You push up the short rates, the market determines the long end of the curve, right? But the Federal Reserve's pushing up the short rates and they become higher than long term. And I'll explain to them, that, hey, if you go to borrow money at the bank, if you borrow it for 2 to 6 months, the interest rate's going to be a lot lower than if you borrow it for 5 to 10 years, right? And so we've got this situation now, and hey, we got Federal Reserve meeting this week. How many people are betting that we're going to have another quarter point drop this week? How many of y'all? How many think it's going to be less, like 0 drop? Okay, good. Yeah. Anybody think it's going to be more than a quarter point drop? We'll see here soon. The thing is it's been so baked in that we were going to have another one in December. But remember what's happened to inflation. We got egg prices going crazy. We got a lot of stuff pointing up. There is an opportunity for them. It's not been that long ago that the market was forecasting, another quarter point in December and then a full percentage point, early next year. Is that going to happen? I don't know. We'll see about that. Well, let's see what's happening out there to the real economy. You see what's happened to inflation. Remember the 70s, 80s, during that time when inflation got out of control, Fed raised rates, unemployment rates started spiking, and then they dropped interest rates. Inflation came back harder the second time. How many of y'all paid more than 14% on a 30-year mortgage back during that time? You got to be my age or older. There's not many of us left in the workforce. A lot of people held up their hands at 14, a few at 16, a couple at 18. I had one lady at a group I spoke to last year signed a 30-year note at 20%. So those things. But what's happened? What's been happening? Inflation's been going on. What are the headlines telling us here? Headlines, wow. People are underwater on their car loans. Anybody remember 2008, 2009 during that time? There's a few signals that say, things are a little shaky back here. Now, who is this? Is this somebody who bought a car before COVID or after COVID? Probably after COVID, right? They probably paid a lot more than normal for a new car or used car. Lower credit number of people is probably a lot. But what else is happening out there? Now we've got six-figure earners who are struggling, falling behind on their bills. So you're making $100,000, you're falling behind on your bills. What about people in higher incomes? They're probably doing pretty well, right? Wow, look at this headline. A third of Americans making $250,000 are making paycheck to paycheck. What does that tell you? That tells, good point. A dollar isn't worth what it used to be. Sometimes you can give some people as much money as you want to, and they'll still be irresponsible. Could that be some of that? Yeah, a little bit. Somebody may want to cut back on the, a 3-week European vacation they're going on and a brand new car every year and stuff like that. But what's been happening in the market, and if you study this, you know this, folks in the lower income tiers have been struggling, especially since COVID. Everything went up. Your rent went up. Food prices went crazy, gasoline prices were up, all that stuff. And so what happened? They put a lot of their expenditures on their credit cards. Credit card balances went up. A lot of that hadn't been paid off. But people north of that income break, whatever the break was, were still doing pretty well. So when I talk to businesses, and one of the things I really like to do a lot is I do a lot of these private talks to businesses. And what they do, members of the Metro Atlanta Chamber will call me up. Hey, we're doing our strategic planning on, March the 15th. Can you come in on the morning of the 15th and give us an economic outlook so we can do our planning of there? And I love those things. Why? There's no recordings and there's no press people. I know there's press people here today. So, and so I can say any dang thing I want to. And I often do. And I tell them really, I said, so really, here's what the economy's doing. This is exactly what I'm telling business people. Who is your customer? Are you 60 plus years old like me? Are they your customers? Their house is worth 50% more than it was 3 or 4 years ago. Their stock portfolio's up. They're at the peak earning years of their life. Hey, they're probably doing pretty good, right? What if mostly of your folks are 22 to 25 years old, just graduated from college or didn't go to college. Maybe they got a bunch of student debt. Maybe they had to buy a car right after COVID and paid way too much for it. Bought a house, paid too much for it. Interest rates 6 and 7%. That's not bad in historical terms, right? For people like me, it's like 6 or 7. That ain't bad. Who's your customer? That's what's happening in the economy out there. Maybe it's a mix and you're going to be okay, but you have to think about, some of those folks that got checks during COVID, some people saved them. Now they're, a lot of the savings is gone, but it's typically the lower half of the income scale that's really getting hurt here. Now, this is something that we have to think about. Consumer credit. Wow, look at that line. And this is nominal as well, so I'll go ahead and tell you that. And there's a lot more people, and they make a lot more money. There's all kind of defenses if you want to say, well, it's not that bad. Well, here's where it's bad. If you're lower income folks, lower credit score folks, and you're paying a really, really high percentage of your income for rent, that's that same customer that I want you to think about. Older customers, they're going to be fine. Folks that got their houses paid off or got a 2.75% mortgage or less. The big issue with the mortgage thing has been the labor market fluidity. People won't take a job if they have to sell their house at a 2% mortgage and have to go sign one at 7 right now or close to it. That's been the difficult thing. So filling some of these jobs, especially some of the upper management jobs have gotten a lot tougher because houses are up 40 or 50%, interest rates. You can't get much for the same mortgage that you've got. And a lot of people should look at their mortgage, that low interest rate mortgage, as a big asset that they've got. But it also may restrict them from taking an opportunity. So what's that going to do here? So let's think about interest rates. Everybody thinks because the Fed's up here announcing we're going to drop interest rates that their credit card interest rates are going down or their mortgage rates are going to go down. And I have to be the one to tell them that, no, that's really not true. The Fed controls the short end. The market controls the high and long end of the rates. here's what's going on here. Nobody knows. Rash amounts of uncertainty. It's not just because of nobody knows what's going to happen with interest rates. There's other things that we're going to talk about, and it's things like this. It depends on what happens to the dollar, right? That's probably minor compared to some of the other stuff right now, but it does matter to exports. But what people don't think about is what it matters to inputs. If you're importing components to build something and then try to sell it, what's happening to you? Your import prices going up with a weak dollar, but you got a little advantage when you're selling. Wholesale prices went up more than expected. Eggs, what's the percentage that eggs had on the CPI? More than 25% of the raise was attributed to egg prices, and we know they're going up. And that's something a lot of people see every day: egg prices, milk prices, gasoline prices, that kind of stuff. So, what are we doing mortgage-wise? Well, the latest, and y'all are probably familiar with these. I don't have to explain what a Fred chart is to you guys and what, but I use these things all the time because I love having the recession bars back there to talk about when those things happen. But now we're running about average 30-year rate, 6.81%. So interest rates have kind of bumped up even though the Federal Reserve is dropping rates. And that's something that we all have to think about. What's that doing to home sales? Well, it's different in Georgia than it is in the U.S. to a great extent here. Because what's happening here, we're going to have the worst probably home sales number nationwide since 1995. Anybody know that? If you read the Wall Street Journal, you probably do because that's where I stole this little article. But not a lot of people are thinking about that. They think, well, hey, there's no inventory, and every time something comes on the market, and to an extent, some of that's still happening here, much less than it was. These blind offers, nobody ever inspects it, nobody does anything. Those kind of days are over. But here's what's happening in other parts of the country. Now, because of the softness due to the mortgage rates, builders have been, they've been buying down rates for a while now, right? The builders that I talk to, and I talked to quite a few of them, they say, listen, if that mortgage rate starts with a 5, you can get somebody to sign up. If it starts with a 6, they might squeal, a little bit, but so they've been buying down mortgage rates for a while, no big deal. Now you're starting to see some discounts on housing. Not in Georgia yet, but, could have. So what I'm setting up here for you is housing is something that everybody, has to deal with, whether it's rental or owning, whatever. Here's a big issue, and now we're going to talk about some of the policies in here. Nobody knows what this new administration is going to do. All we know is what they're signaling to the market. Hey, mass deportations. We're going to do tariffs on everything and big tariffs on China and all that stuff. And so what I'm going to get at here is, let's talk about tariffs for a minute, just a little bit more here. Everybody knows tariff is a tax, and depends on how competitive the market is, how much gets passed on to consumers. Some people want to keep their market share. We've all known a long time that prices don't move as quickly as exchange rates do because you want to show stable prices. A lot of times companies, I work for 3 European motorcycle, luxury good manufacturers, not just Triumph. I also work for Ducati and for KTM. KTM's the Austrian company that builds a lot of desert racing bikes and Parrish Dakar kind of stuff and enduro bikes and that kind of stuff. We ate margins when the currency would go against us, and just to keep those prices settled. But now you've got higher commodity prices for building houses. You've got tariffs, and now you've got potential deportations. That's a big part of this market here that we have to think about. Another thing of tariffs is some of the companies they built factories in Mexico. This company, Polaris, who knows what Polaris is? They build side-by-sides and ATVs and all that stuff. I worked at KTM when Polaris tried to buy our company. This is being recorded. Can I say this? I will say I was the French resistance inside KTM trying to keep our company from being bought, and it didn't end up getting bought. But Polaris is a big, big deal. Look at how much production has gone to Mexico. What happens if we see a big tariff go into Mexico? It's going to hurt these companies that did that, right? Will the tariffs happen? That's a really good question. My hope and my expectation at this point is that the tariffs are like the grenade that you throw into your neighbor's yard. You're not trying to hurt them. You're just trying to send them a signal saying, hey, don't come outside and don't have your stupid kid coming over here stealing my fruit off my tree and stuff like that. That this is the warning shot. However, I will up the probabilities when it comes to tariffs on China. I'll bet money, on that. If there's only one tariff, guess where it's going to go? But what you've seen already is reactions from other countries. Now, what does that mean? Our organization entertains, international companies all the time. I sat in on our economic development meeting this last week at the Metro Atlanta Chamber, and I posed this question. I said, listen, I'm going to speak to Atlanta Economics Club. How many of these companies that you're dealing with that are thinking about expanding or thinking about moving here have mentioned tariffs to you and the uncertainty around tariffs? Anybody want to guess what the percentage was? 100. Absolutely true. Everybody is looking at this. And I'll always tell this story. It's like, election years we see less private investment. And private investment is what creates jobs in this country. What do people do? They sit on their hands and say, yeah, I'm going to wait this one out and see who wins the election. So what did they do all this year? It's like, hey, you couldn't tell who was going to win until the last day. So a lot of people are already sitting out on private investment, waiting to see what happens. Well, now we know who won, but now we don't know what's going to happen, and that may well hurt us. Now, I also remind people, I tell this quick story. I got about 3 minutes left. When I first went to work for Florida Tax Watch down in Florida, I had been working at Florida State. That was my first time being a government employee. I tell people I was the worst government employee in America. My boss told me that I was working too much and being too productive. And I thought, man, this is no place for me to be. And so this group called Florida Tax Watch hired me. What they did is policy analysis kind of stuff. That's what I did. But they were a self-appointed watchdog of the spending that the state did down there. And one really smart guy got me off to the side right after I'd started. I'd go to all these appropriations committee meetings and trying to figure out what was going on. He said, listen, Jerry, he said, the game you're watching is not necessarily the game that's being played. I mean, I'm just a redneck, from Alabama, man. I don't even know what he's talking about. So he said, watch this. He said, this is a sunshine state. Every meeting has to be in the sunshine and public notice, all this stuff. He said, the things they're talking about now are actually not what's actually happening behind the scenes. And so I equate that a little bit to what's going on with the Fed meetings and all this stuff. Not that they're trying to do anything nefarious. That's not true. But what people think is important is what Chairman Powell comes in and says, but that only controls the short end of the rate, right? We've already seen mortgage rates and other long-term rates going up, so it really doesn't matter what the Fed does if you're trying to buy a house and, you need a mortgage and all that stuff. So that's a little bit of what you're watching, and what people think is the most important probably isn't the most important. What is important in the interest rate games is this Fed chart right here. This is total assets. I call this the Fed's balance sheet. You can see what's happening here. When we went through the Great Recession, the Fed's balance sheet, if I call it that loosely, don't quote me on that and don't challenge me on that. That's just my little saying so people understand what's going on with the bond situation. And I tell people during the Great Recession, we went from having $1 trillion on the books to $2 trillion for that big, long recession where everybody lost their house and lost their car, and your neighbors had to leave town because they lost their house. Look what's happened since. And so we saw after COVID, that little short 2020 recession, A lot more, if this line's going up, it's quantitative easing, right? If it goes down, it's quantitative tightening. It's the easiest way to explain that to business people I've ever seen in my life. You don't have to guess, and they understand that. That's really been a good tool for me. What's that big spike over there in 2022, 2023? Anybody want to guess what happened, caused the spike? You can't guess. You've heard me speak. What? Exactly. Who said that? Good answer. Oh, that's a little unfair, but that's cool. Silicon Valley Bank failed, and we had to throw some cash at the economy. But it is rolling out. Anybody want to guess what we're rolling out about a month by the month now? Bonds rolling off the balance sheet. Guess what happens? You're selling bonds. Bonds are getting cheaper. That raises interest rates too. These are longer term than what the Fed's doing. So it's about, I think I wrote down, it was about $60 billion a month. Now it's running about $95 billion over the last month or two. So there is some pressure on the market there that will keep interest rates to keep the economy from getting too hot. So there's a kind of a relief valve here for doing that, and I think that's something that financial people should be watching if they're not already. So what's the issue with that? Not a big issue. Here's the big issue I warn business people about, and it's this: government debt. What's going to happen? I mean, that's one reason, interest rates are higher than they would have been otherwise, right? And there's a great article in the Wall Street Journal. This is before the election. I'm not political, so I'm not saying anything. They said neither one of these candidates is going to address this government debt. And the market believes that, and that's why interest rates are higher than they would have been otherwise. Can we address it? Sure. You can raise taxes. You can lower spending. What's that do for your political future right now? We're not voting people out of office for letting this happen, and so we're going to get more of it. What does that mean? Less, $2 billion a day on a net basis we're spending on interest. We could be spending on schools, housing, healthcare, whatever you think your government wants to spend on. That's the big warning I have for business people. It's like business, interest rates are going to stay higher for longer, and this is going to happen. I've been saying this for about almost 3 years now. So anyway, that's your warning. One last slide here. I do a video every month called Georgia by the Numbers. It's like, this thing is like 2 minutes and 39 seconds. Even your kids who have a TikTok-style attention span, might learn something, and maybe some of you folks have that kind of attention span too. I'm kind of getting in that mode myself these days. But every month I come out. It's on YouTube. Remember, the job numbers for Georgia come out on the third Thursday every month, most months except February. And so I shoot this early the next week. We've got one being released today. And so you just type in Georgia by the Numbers on YouTube, and sometime later today you'll see it. I typically talk about the job numbers and one other interesting thing that's going on in the economy that I think you guys should know about. All right, that's all I had to present. I almost made it on time here to get done, but maybe we've still got a few minutes for questions. If you want to ask tough questions too, that's great. You can criticize the way I explain stuff, but literally this is the way I explain stuff to business people so they will understand. And yes, I'm an economist, but really my job puts me in the situation of being a translator. I translate economics to business people and legislators. I translate legislative stuff to business people and legislative and business stuff to economists. So I kind of sit in that middle, trying to find simple ways. And if you saw something that I said, it's like, hey, if you would just explain it this way, hey, I'll be glad to listen to you. There's my email address if you don't want to do it publicly. But I'm always, just like when I did with my grad students, I'm trying to find ways to help people understand what's going on out there and let them make their decisions and react. But anyway.